The primary purpose of this podcast is to educate and inform. The views, information, or opinions expressed by hosts or guests are their own. Neither the show nor any of its content should be construed as investment advice or as a recommendation to buy or sell any particular security. Security-specific information shared on this podcast should not be relied upon as a basis for your own investment decisions. Be sure to do your own research. The podcast hosts and participants may have a position in the securities mentioned personally through sub-accounts and or through separate funds and may change their holdings at any time.
Welcome to This Week in Intelligent Investing, where we examine timely and timeless investing topics to help you become a better investor. Enjoy authentic, unscripted discussion featuring Phil Ordway, Elliot Turner, and other thought-leading investors, brought to you by MOI Global. And now, here's your host, John Mihaljevic.
Welcome to a new episode of This Week in Intelligent Investing. Great to have you with us again, and great to welcome my co-hosts, Phil Ordway and Elliot Turner. Phil, over to you to kick us off for today's discussion.
Thanks, John. So I thought we'd spend today just going through all the good material and discussion that we could have based on last weekend's Berkshire Annual Meeting. So I was there in person. I think you guys both listened or watched remotely, and it was great to be there in person again. So I was there last year as well, but last year I think still had quite a bit of COVID hangover element to it. I mean, it was very noticeable last year that there were just far fewer international visitors. You know, again, I don't know what the numbers would say, but I would have to guess that at least a quarter, maybe a third or more of all the people that go to the Berkshire meeting come in from outside the U.S. And they were certainly back in full force this year. So it very much felt like a normal Berkshire meeting, similar to what it was like before COVID. And I was actually talking about this morning with a friend of mine who's gone, many years as well, like I have. And we both agree that if you blindfolded somebody, or even if you didn't blindfold them and you just put one video up next to the other, and you had this year's Berkshire meeting and the one from 10 years ago, that you wouldn't be able to tell the difference, which is really a stunning statement when you come to think of it. I mean, Buffett going from 82 to 92 and Munger going from 89 to 99 and not being able to tell the difference is just an astounding statement and achievement. They really are remarkably sharp. You know, there's really been no change at all. It's like time has just stood still in a lot of ways. So really remarkable and impressive in that sense. And it was good to be back and see a bunch of old friends and get the catechism again. So I'll go through a list. I made kind of 8 or 10 things that really stood out to me that I thought were interesting ideas that were worth discussing. And then I want you guys to either throw out yours or react to the ones that I picked. And then I have a little game to play at the end that I thought was interesting that I saw somebody send around. So I thought maybe the most interesting and not provocative, but maybe somewhat counterintuitive thing that Buffett said the whole weekend was that in 58 years running Berkshire, I would say there's been a great increase in the number of people doing dumb things, and they do big dumb things. And he said that in the context of it creating more opportunities to make money. And so, you know, the kind of the subcontext to that was that he was referring to all the craziness that's been happening in the world. You know, he didn't call these things out, but, you know, clearly things like meme stock mania and all manner of folly and nonsense created by zero interest rates and crypto and everything else. But at the same time, you know, this is where I always have to explain to people that might be new to listening or reading what Buffett says and does, or anyone for that matter, which is that you have to hold two competing ideas in your head at once, because he would certainly also say and agree that markets are now far more efficient than they were 58 years ago, right? The instantaneous ability to access any information on a device in your phone, in your pocket, is a massive difference from when you used to have to send away for annual reports on a massive time lag. So, but I did think that was really interesting because, you know, he said over and over again that he'd love to be born again today and have a small pile of money and do big things with it. And so despite the fact that we might think that, humankind has advanced in leaps and bounds in the last 58 years and we're all much smarter than we were back then, he would seem to be saying the opposite, which is that people are doing more dumb things than they used to, and they're doing big dumb things, which is really kind of amazing. The other, there were several topics of the day, I would say, but the banks were right at the top of the list. He actually prearranged a little gag where he had big placard name cards made up for himself, and he was available for sale, and Charlie's was held to maturity. So that got a good laugh from people. But, I think the message of the day was that they were quite cautious about banks. And look, I would say that his track record as a bank investor is as close to flawless as you could ever get. He used to own a bank in its entirety in Rockford, Illinois, and he loved it, and it was a great bank, and had to sell it when the Bank Holding Company Act of 1970 required him to do so. But since then he's made many enormously profitable investments in banks, and it's very noticeable that he is not making any new investments in banks today. On the subject of Bank of America, he did say that he really likes management. He also emphasized that he's somewhat loyal to the company because he went to them and proposed the deal in 2011 that really brought him into the company in a big way. But beyond that, it's quite noticeable. The silence is deafening, as they say. He pointed out, I think rightly so, that the nature of deposits and the nature of bank runs has just fundamentally changed. And, now you can be sitting anywhere. You could be, sitting in your backyard, don't even have to get out of bed, and you can pull your entire deposit account out. You don't have to go stand in line for 3 hours and watch somebody count out bills. It's just instantaneous. And that is a fundamental change in behavior. And I agree. I think the nature of that has changed and is still being felt. And we still don't know the ultimate implications of that. He cited plenty of other things. Both he and Munger both called out the pain in commercial real estate and the hollowing out of commercial districts and downtown areas, and thought that pain was going to be substantial, certainly not trivial, and that the buildings aren't going to go away, but the owners might change and might go away. The fallout from COVID and higher interest rates is very real and is not over by any stretch of the imagination. Buffett also said that had the deposits at Silicon Valley Bank been lost, that it would have been catastrophic. That was his word. I would have thought he'd be a little, not sanguine, but a little less dire on that. I think Silicon Valley Bank wasn't quite as interconnected and potential. It didn't have quite the same potential to cause catastrophe as some of the interconnected banks in the global financial crisis of 15 years ago, but he very intentionally chose the word catastrophic. He also, I think, rightly called out the very poor communication from the banking industry, the executives, the regulators, the media, and how they have failed to limit the panic that spread amongst the public. And again, one of the things I'll never forget from this episode of March 2023 was just how clueless and uninformed the venture capital community was. And so it doesn't bode well if these venture capitalists that control tens or hundreds of millions of dollars or billions of dollars doesn't understand how the banking system works. It doesn't bode well for the rest of the general public. And he's got a great point there. Artificial intelligence probably came up 3 or 4 or 5 times at least. I kind of lost count. I think at one point Buffett paraphrased Einstein and said, if it can change everything in the world except how men think and behave, which is kind of a good way of putting it, I thought. Munger was a little more definitive, I'd say, in that he was skeptical of the hype. And he took a moment to defend old-fashioned intelligence and said, it can't replace Ajit Jain. It can't tell me what investments to make. But Buffett also compared it to the atomic bomb and its destructive potential. So, pretty sobering moment there. Buffett later said that the U.S. dollar is the world's reserve currency, and he sees absolutely no other option for it, no other option to replace it, rather. So he sees the U.S. dollar continuing in that role, and I tend to completely agree. I had some interesting debates with people who still seem to think that the Chinese currency is a viable alternative, or that crypto or something will do it, but that's certainly not Buffett's view. There was a decent amount of commentary about Chinese-U.S. relations, and Munger called it stupid that there's so much tension, and they both said it was an absolute imperative that the U.S. and China get along and that they need each other and that they don't have to be total lackeys, but they don't have to give away the shop either, and they need to find a way to coexist. Referring to some specific companies, it was pretty interesting. He completely and openly dismissed the potential for an outright purchase of 100% of Oxy. He said, we're not buying control. We wouldn't know what to do with it. So they have a 24% stake. I believe it's worth about $12 or $13 billion right now. He thinks very highly of management. He thinks oil is going to have to be around for a long time. And they're quite happy with that. He said he's thrilled to own the shares that they do. Obviously isn't going to comment on buying or selling, but Munger later said that, he thinks, this was an interesting point that I agree with, was that even if you want to take a completely agnostic view of climate change, that it makes sense to invest in a switch to more renewable sources of energy, because then that would allow you to preserve the hydrocarbons, which are in a great sense irreplaceable. They just do things that other forms of energy can't do, and they are by definition non-renewable. And so I thought that's an interesting point that I would hope most reasonable people could agree about. As it referred to Activision, he made some pretty optimistic comments about that last year, owned a multi-billion-dollar stake in the common. And he said in this case that he thought Microsoft met the opposition more than halfway and that the deal should have been approved, but not everything that not everything that should happen does happen. He thinks the British government's making a mistake, and what Berkshire will do from here will depend on a lot of things. So, he didn't comment explicitly about what they're going to be doing with the stake, but I think he made it pretty clear that they're actively considering the situation, and we'll see what they end up doing with that. Apple, it was an interesting one. He got a question. I don't know if someone maybe misquoted Professor Aswat Damodaran at NYU about Apple being 35% of the Berkshire portfolio, or 35% of Berkshire. And I'd have to look it out. It's 160 billion. So maybe if they were, I don't know how they would have quite come up with that figure, but he said, obviously it's not 35%, but even if it were, so what? Basically, it's a great business. We bought it at the right price. It's a better business than any we own. He said iPhone status with customers makes it an extraordinary product. They're paying $1,000 or $1,500 for it, but would pay far more. He doesn't have to understand every aspect of the technology because he can understand consumer behavior. And he made it pretty clear that he has not seen consumer sentiment or consumer behavior quite that strong and entrenched and favorable in a long, long time. Paramount, that's an interesting one because he commented quite a bit about that on his trip to Japan just a few weeks ago in a negative sense. And between that interview and the meeting this past weekend, they came out with a pretty negative set of quarterly results and took a hatchet to the dividend, and the stock fell off a cliff. I think it was down 30 or 40% that day. And he said it's obviously never good when you have to slash the dividend. A lot of companies wait too long to do that until it's too late in a lot of senses. And we'll have to see what ends up happening there. I don't believe that was Buffett himself, but it's a decent sized little position in the portfolio for Berkshire. He said we're quite equivocally, we are not done with Japan yet. We'll be searching for more opportunity there. Again, reiterating what he said on his trip to Japan, and said he was just pleasantly surprised by the trading houses there. As an aside, they had Ajit Jain and Greg Abel both on stage for the morning session. They both took a couple of questions directly, one of which was Greg Abel talking about the trip to Japan and what they'd learned there and how pleased they were with the whole situation there. He also updated in broad terms the situation at BNSF and gave a pretty clear vote of confidence in management in that sense. Likewise, Ajit commented on the situation at Geico and had some pretty interesting numbers and descriptions of the challenges there and how they're really grabbing the bull by the horns and investing in telematics and technology more broadly, and kind of the eye-watering complexity of the systems that they're trying to build or rebuild there. So that was very interesting, and likewise I think gave a pretty clear endorsement of management. So I thought that was quite interesting. Another interesting Ajit note was that he was disappointed that they didn't get to put a lot more capital to work in the insurance and reinsurance markets over the past year. And he said in particular, the January pricing cycle wasn't very good, but then for whatever reason, the pricing got way more favorable in April And he called Buffett up and got, in a conversation that lasted less than 30 seconds, an approval to add $2 billion to the portfolio that he was capital that he was putting to work in that underwriting cycle. And particularly, I think the biggest change might have been in Florida catastrophes, such that now if a big hurricane hit Florida this season, they might lose up to $15 billion. And if it doesn't hit this year, they would make several billion off of that. So they obviously found that pricing and those odds favorable. And that does make sense, because you would think coming off the Hurricane Ian last year, which was a $60 or $70 billion insured loss, at least at this point, when it hit Southwest Florida, one of the top 2 or 3 insured losses in U.S. history. You'd think the pricing would have gotten better, but for whatever reason, there was a little bit of a lag there. So they wish they could get even more capital put to work there. And Buffett said, I sure hope Ajit calls me back very soon with another opportunity to put even more to work. So let's see. Oh, well, I'll come back to that. So I'll stop there. I have a couple more things to hit, but I'll stop there and let John and Elliot jump in with reactions or observations of their own.
Yeah, no, that was awesome. Thank you for putting that out there. And, I just want to also thank Rational Walk for his great Twitter thread summarizing some of the Q&A as it was happening. That was really helpful for me. I unfortunately wasn't able to make it to Omaha, but I felt like I was almost there, and then got to watch some of the key parts afterwards. I think, Phil, you pointed this out, but if I had to say one part of it that really stood out to me, it was Buffett saying that piece about not understanding the tech in an iPhone, but understanding consumer behavior. And I just, really think in many ways, you go back to like the 80s and 90s, that wasn't possible with a tech company the way it is today, where these things are woven into the fabric of our lives. So I think that has some ramifications for how we all think about what is and is not within our circle of competence. Like tech has been abstracted from technology.
That's fair. That's a good point. Yeah. I agree.
Yeah,
with
that one really stood out to me. And yeah, it was interesting. You pointed out that piece on a great increase in the number of people doing dumb things. But yeah, Munger, and I guess even Buffett pointed out he always does this, but he said that value investors are going to increasingly have a harder time because there are so many competing for a smaller opportunity set. And he's coming at it from a different angle. But like there are a lot of smart people in the market, and everyone's trying to find an edge. And when everyone's looking for the very same edge, well, it's not going to be easy for it to actually work.
Right. That's the competing idea aspect of it. I totally agree, because at least once or twice, Munger kind of bemoaned the fact that we have too many investors, too many investment funds, too many wealth advisors. And yeah, like I said, I don't think anyone would argue, certainly they wouldn't, that the world hasn't become far more efficient in the last 6 decades. So,
and there's more hurting because of so many people kind of trying to find the same edges in places. And things seem to go to more extremes, which I think is part of what Buffett's saying with the number of people doing dumb things. But it's hard to take the other side of that because you don't know where it's going to stop. And part of being a value investor is being a contrarian, and that's not that easy.
Agreed.
One of the things at the outset that I thought was really interesting, I was reading about this company Catalent the other day, and their CEO and their C-suite basically was reluctant to admit headwinds to their business, and contrast that with Buffett in the very beginning, just laying out there that there are going to be parts of Berkshire who experience falling income in 23 from 22 levels, and that there are going to have to be more sales in areas where there had not been sales meaning discounts in areas that hadn't happened over the last couple years. I think it goes without saying, it's part of why we all are so enamored with Berkshire in our own ways, but like what a breath of fresh air to just hear it bluntly laid out instead of trying to decipher through a bunch of corporate speak. It's so different and unique. I wish more would learn from that example. And I thought, the mention of buying a lot of T-bills recently, it's like there's no concern about the debt ceiling at all. I thought that was interesting. While the financial press tries to get us all like shaking in our boots about it and a little scared. I'm not here to
Yeah,
give
that's
any
that's an
determination of how to
interesting.
think about it, right? But who
Yeah,
knows
that's an
how?
interesting one. Yeah, I didn't hear if he, and I'll have to go back. I may have stepped out and missed one or two questions along those lines, but I don't think he addressed an explicit view that like, oh, we're definitely going to avoid a default or a stare down, some sort of total catastrophe here with the debt ceiling. So, but that's a good point. I mean, he's talked about it plenty in the past, and you're right. I mean, he's buying lots of T-bills, but I don't know what else you'd buy. I mean, you'd have to move it into some other domicile if you were going to totally avoid that. He's always been a huge purchaser of T-bills, so.
Right. It isn't doing that right now, kind of implicitly
Yeah, no, exactly.
expressing
Right.
that.
Yeah, but I don't know if there was a question about it and I just missed it, or if we
No,
if they
no,
just
it was in the beginning before getting to the Q&A.
right. But again, like, yeah, no one in the Q&A
I
that I
see.
heard said like, oh, why are you buying so much in T-bills? Aren't you worried about the debt ceiling, or just a question about the debt ceiling in general, which you'd think would have been top of mind? And you're right, like I don't think it came up.
And there were a lot of questions that I'd say were macro in nature, including
Yeah.
questions about monetizing the debt and
Yep.
what the Fed was doing, but not about the debt ceiling, which I thought was interesting. Always surprised at how many people try to ask or want to hear their answers to macro questions.
Yeah. Well, yeah, that doesn't seem to ever change, right?
Yep. Year in, year out. It's something you could expect. I thought the quality of the questions was pretty damn good overall.
Yeah, it was certainly as good or better than it's been in prior years. I agree.
One more favorite piece was Munger on NetJets being worth as much as any airline out there. I think I don't know why that stood out to me, but it did. I thought it was interesting. It's definitely not the same scale as any airline. It's just like a differentiated business model, and I think I would love to like learn more about it and hear more about how exactly the numbers flow through.
Yeah, that's a good point. I don't know enough about the numbers and where things stand at NetJet to compare it to any of the big airlines, but I'll say this. I mean, at one point, they were there on Friday and they were definitely there on Saturday. There was a massive protest of NetJet's pilots, and that's happened in prior years as well. And I believe they have a contract up now or up soon. But this year, far more than in prior years. There were way more pilots. So by a very rough estimate on Saturday, during lunch, during the middle of the day, during the meeting, there had to be at least 200 or 300 or 400 NetJets pilots protesting and marching around outside the convention center. And then two was they hired these video billboard trucks with some extremely aggressive and negative messages and ad campaigns opposing management and complaining that the schedules were sloppy and leading to fatigued pilots and claiming that they were way underpaid relative to their peers and on and on and on. They have a whole website set up to run this campaign. So I thought that was interesting that it's apparently even more contentious than it's been in the past.
Interesting. I didn't know about that. And I guess, the last thing I was going to say, kind of somewhat related, I'd be remiss not to ask any like interesting events or interesting happenings around the meeting that stand out to you.
No, like I said, it was actually pretty normal and other than the, if you hadn't been paying attention for a long time, the NetJets pilot thing stood out to me, but the convention hall was a little quieter than usual in that there was more open space. Like there were some companies that I think have been there in the past that didn't choose to participate or couldn't participate or whatever. There were just a couple of open spaces where normally it's almost wall to wall. Now that said, the people in there and I bet the dollar spending was as high as ever. I mean, people were definitely spending like normal, which is to say like crazy. So, and I mean, I'll give you an example, like the Bookworm, the bookstore with all the recommended books. I don't think there was a single new book in there with the possible exception of the Sumner Redstone family saga book that's come out. I think that was the only new book in the whole place. And the prices were way, way higher this year. I mean, a lot of the books were $3 to $5 more expensive than they've been in the past, and they almost all sold out. Like by Saturday at 3:00 or maybe even by lunch on Saturday, the whole place was cleared out. So that was pretty amazing. There was also this new, I don't know if you guys know what they're called Squishmallows. They're like these puffy
Of course, I know it.
things.
Two little girls. How could I not?
Yeah, exactly. So they had a new stand, and I mean that line. I made the mistake of waiting until Saturday, and they were sold out of almost everything. So, but the line on Friday looked like it had to be an hour to get through it. I mean, it was just crazy.
Did they have like Warren and Charlie Squishmallows? Is that what it
they did? Yeah, and those were actually the only two still available at one point on Saturday. All the Pokemon characters and all the other like normal characters sold like lightning. Like it was crazy.
I guess a lot of people went needing something to bring back for their kids.
Yeah, for sure. Yep. So yeah, other than that, there really wasn't a whole lot new. Like I said, it felt like very much, out of the old 2017, 18, 19 kind of feel.
That's got to be refreshing.
Yeah, no, it was good. It was definitely good. It was good to be back and see a lot of people and hear from the Berkshire folks. It was definitely good. So, John, do you want to react to anything, or do you have any observations?
Yeah, I mean, you guys have covered it really well. I'm curious, Phil, kind of reading between the lines on the banking stuff. I mean, do you feel like Buffett is kind of more down on banking as a business because of what's been happening? I mean, Berkshire certainly could have stepped up, kind of to say that he's loyal to B of A. That's fine, but this would have been potentially a huge opportunity. And do you feel like you got the sense that maybe Buffett isn't so high on the banking business as a business model?
No, 100%. Like I said, I think he's not going to come out and be totally negative on it, but I think the implications are pretty obvious, right? Because not only has he not been buying things, but he's actually sold down some positions in the not too recent past. And so I mean, he always votes with his wallet, and on top of that, I mean, he expressed it pretty directly that it's just so easy to yank your deposits today. And the value of anything, the value of any bank, if you're going to own it, is the deposit intangible, the deposit franchise, right? I mean, you have to assume at some level, if you're going to pay any sort of price for a bank, that they have a customer base and a deposit base that's going to stick around. And so my additional add-on, and this is purely me, not him, would be that you kind of have just a triple witching, right? Because deposits are suddenly now less, not suddenly, but gradually but severely and acutely, as just evidenced by Silicon Valley Bank, deposits are less stable now than they used to be. You have pressures on net interest margin as well, because interest rates have gone up so much, and what banks were doing for a long, long time, most of the past decade or more, was paying almost nothing for those deposits. So that's going to have to go up. The yield curve's inverted, which is usually pure misery for banks. And on top of it all, we may well see a big credit cycle. I mean, or even just a moderate credit cycle, which we haven't seen really, even despite COVID. We have not seen a sustained period of meaningful charge-offs. So, even if charge-offs get up to a relatively benign level of 50, 100, 150 basis points a year, that's going to be all have to come through provision and all hit the income statement and equity capital here over the next however many quarters or years it takes to work through that. So, I think the comments around commercial real estate, someone asked in the context of the banks, I think, but pretty directly, why wouldn't Berkshire get more involved in commercial real estate? And Munger's done quite a bit there personally. And he said, well, Berkshire's never done it. It doesn't make quite as much sense on a tax adjusted basis for Berkshire to do it as maybe some other people. But he just doesn't think it's going to be all that interesting for them either. And he thinks the pain is going to be pretty significant. So, and that figures in, right? Because a lot of banks do have pretty significant exposure to commercial real estate.
Yeah, interesting. Any additional thoughts on succession?
He very clearly reiterated that Greg Abel would be his successor, and that Ajit would have a clear vote as to who would be the person to replace Greg Abel in that role, but that it would be Greg's ultimate decision. But he more or less said that he expected them to kind of agree, but that he also was very clear that that wouldn't be something that they would be talking about or even finalizing a decision on anytime soon. I mean, I think the way they've always treated it is they have a name in an envelope if something unexpected happens, but that name can change, as we've all seen with Greg Abel's role as it pertains specifically to him. So, but yeah, I don't think anything's changed in the sense that for as long as he wants to do it, Ajit will be running the insurance operations and will be a director of the company, and Greg Abel will be running everything else and will be a director of the company. And when Buffett's no longer the CEO, that will go to Greg, and that's that.
I think he also said something to the effect of Greg being as good a capital allocator as he is.
Yeah, he did. And he said, in a lot of ways, Greg has, the same abilities and just more energy and more vigor. And, he said, I think it was actually in the Japan interview, that he may actually get better results in some regards because he's got, an ability to kind of run around and hold people accountable and do things in a way that Buffett either doesn't want to do or doesn't have the time or energy to do or whatever. So that's kind of an interesting little tidbit. But look, I mean, I think any halfway reasonable human being would agree that there is no Warren Buffett replacement, right? You could have the most competent person in the world, the best fit in the world, and it's still not going to be Warren Buffett. And Greg Abel said as much himself. So it's definitely going to be a change when and if it's him that actually occupies that seat at some point. So just is what it is.
I'm so intrigued by the enthusiasm for Japan. Like, do you recall Buffett ever singling out another geography in that way for investment targets?
Not in this size, not outside the US in this size, I don't think. I mean, certainly every time he's done anything internationally, he's highlighted the positives of it. He's done that with Israel. He's done it with Germany. He has substantial indirect exposure to all sorts of different countries. But no, you're right. I mean, the Japan thing definitely stands out. He's the largest outside equity holder, so non-Japanese owner of publicly traded equities in the world. And I think he confirmed, and I don't know that it was, I assume there was a credible way to check this, but they issued Japanese yen denominated debt out of Berkshire, and he said they're the largest corporate borrower outside of Japan as well. So yeah, it's a meaningful bet. I mean, it's not huge. It doesn't move the needle anywhere near as much as, Apple or some of the controlled and owned subsidiaries like Berkshire Energy or BNSF or Geico or anything like that. But yeah, it's meaningful. It's a big deal. I think the most intriguing part to me is that he felt strongly enough about it to fly all the way over there and spend 3 or 4 days and meet the management of all 5 of these trading houses and conglomerates and sit down with them and make it very clear to them that if they find something that they'd like to do where they're capital constrained, that all they have to do is pick up the phone. And again, I'm not an expert on those companies, but that'd be a really nice way if he likes them and thinks they're doing a good job and he could be, kind of a capital provider on a multi-billion-dollar basis. That would be very appealing to him and would potentially make a lot of sense. So that's a really interesting part of it. I don't know that he's going to come across another massive or major acquisition right now. I mean, I think Japanese companies historically have always been pretty reluctant to completely open themselves up to outside or Western investors. And that's slowly changing maybe, but I've been hearing that for 15 or 20 years. So we'll see how much that really changes. But in this case where, the Japanese trading houses could be still somewhat in control or even officially in control of whatever investment they're making, but have Buffett as a partner, that would seem to make a lot of sense on both sides, right?
Well, yeah, no, that's something I was wondering about. Speaking of both sides, like both sides of the fact that for 15 years, people have been like, I hope Japanese companies change their corporate ways. And here you have Buffett, who's been so focused on capital allocation specifically as a pillar for businesses, investing in a geography where that's not necessarily what brings people to the area. In fact, it's what keeps most people away. And I don't know, maybe one of the things I wonder about personally is if Buffett's involvement and intrigue in the country could help other other corporate leaders in Japan find religion on the capital allocation front, start being a little maybe a little different there. That's something that a lot of people have been waiting for a long time.
100%.
I mean, I was involved in one company when Dan Loeb came in, activist, and was like, publish some documents in English was one of the pillars of his activism. Yep. So there are a lot of different ways that Buffett's involvement could potentially change. And I get these emails periodically from Invest in Japan, like this group based in Tokyo who's trying to open up opportunity. It was trying to open international eyes to investments in Japan. And, what better way than to have Buffett sitting in Japan while being interviewed on CNBC?
Yeah, no, it was, like I said, it was a powerful statement. I agree. The fact that he went over there and said over and over again that he was pleasantly surprised about his interactions and meetings with management, I think implies that he was rightfully somewhat, I'll believe it when I see it kind of attitude toward their reception. But again, I think it speaks to the fact that you're right. I mean, I've been hearing this. I went there in 2006, and that was ostensibly the purpose of the trip, right? It was like there was going to be this big, quote unquote shareholder revolution type thing in Japan. And it didn't really happen. I mean, it may be in tiny little baby steps, but it's fascinating. Right. And I agree. Like if he certainly has sway and cachet there, and his name and imprimatur mean a lot. And so you're right. That'll be really interesting to see. I mean, it will be really fascinating if he decides to make more minority investments in public companies. That would be really interesting. It would also be really interesting if he teams up with one of the 5 trading houses on some sort of investment. And it would be interesting to see if other companies reach out to him directly. Again, though, I mean, part of the problem is there's some great companies. I think there's some pretty reasonable valuations. Again, this isn't investment advice. I do own one, but it's a global company, and a lot of Japanese companies are pretty international. They also don't need a ton of capital in most senses, right? I mean, these great companies tend to be quite profitable, and the growth, at least in a lot of their markets, tend to be somewhat muted. So, it's hard to imagine it would have to be an acquisition or maybe some opportunity like that. I don't know.
Yeah, no, that's really interesting. And when you think about like how global these companies are, the yen has been pretty weak, but their cost structures tend to be denominated, like they're global in a different way. They produce what they sell in Japan,
right?
Whether it be something that's a physical product or something intangible. And so their margins just can't help but go up if the yen's getting weaker, if they're selling predominantly to economies outside of Japan. Yeah, so there are interesting dynamics in that sense, though you do have to be wary of how to treat your how to treat your exposure in the stock on the yen. I think one of my Japanese positions did quite well if you denominate the position in yen over the last year and a half, but not so much so if your position is in dollars.
Yep, 100%.
And I guess to how Berkshire structured that trade, if you will, taking the Japanese, taking out debt in Japan helps offset some of the FX exposure. And
I mean, I think it's 1-for-1 almost, right? And I think he borrowed it sub 1%.
Yep.
So, and I think the earnings yield at the time he did it, I think these were the numbers he was citing at the interview he did in Tokyo with Becky Quick, but I think he said the earnings yield at the time was 13, 14, 15%. He's borrowing at less than 1%. The dividend yield was whatever, and it's gone up a big chunk since then. So yeah, it seemed those are the kind of, as long as he's right about the businesses that the trading houses owned. And again, it was, it's kind of a conglomerate style structure. So it's something he's pretty familiar with. And as long as he got that right, it was going to be hard to lose a lot of money.
And that's one question we all have to ask ourselves. If we're thinking about investing in Japan, is it a little easy in Japan? Is it a little easier for Buffett to say, "Hey, well, I don't love the capital allocation, but I do love the spread between the cost to underwrite and undertake this investment"?
Yep, 100%.
Yeah, I was gonna agree with that. I mean, not all of us can borrow in yen at under 1%, so the hurdle may not be the same for everybody looking at Japan. It's probably not as low as it is for Berkshire. So,
that's fair. There's lots of things they do that we can't do, and there's lots of things that Buffett's capable of doing that other people are not capable of doing. So that's entirely fair.
Yeah, but at the same time, I remember some years ago Buffett gave a talk at a university, and they asked him precisely this question. Basically, you can borrow in Japan in yen at 1%. Why haven't you made investments there? And he basically
I remember that too.
Haven't found anything that's attractive enough that beats 1%.
That's fascinating.
That question was probably around when Mark Cuban very publicly talked about taking all his mortgage and debt exposure and converting it to yen. So 2013. I'd
have to go back and look. Yeah, I don't remember. I remember that. I think that's actually been asked at least twice over the years at like 5 and 10 year intervals, like at very different points, and so it's a great point, John, because I totally remember that question too. And it's fascinating that it took that long, and he's been looking for that many years and really over multiple decades to say like, yeah, I know I can borrow for next to nothing, but I got to find something that's going to make a good spread on that money with a lot of safety and reliability. And he finally found it. And these companies were always out there, right? But, finally the combination of his experience, his understanding, and the valuations available in the market all came together at the right time.
Yeah, and I think it's not just about the valuation and the earnings yield. I think, back when he was answering that question, he really zeroed in on the ROEs, kind of as a buy and never sell kind of investor. So I guess, we could take his activity in Japan as him basically saying, yeah, ROEs are moving up. They're still subpar, but they're comfortably above that hurdle.
Yep. Agreed. So I also want to say, I have one more quick thing I do that'd be fun with you guys. Before I forget, unfortunately, my flight didn't get in enough time on Friday morning to go to the MI event that Tyler organized, but I did catch up with him later in the day. It sounded like a great event. I'm glad that went off, so I was disappointed to miss it, but it was great. I had a bunch of podcast listeners come up and say hello, so that was awesome. It was great to see a bunch of people in person, because as you guys, it seems hard to remember now, but this was started during COVID, right? John started this podcast in the summer of 2020, right? So, in a lot of cases, I've never even had the chance to meet a lot of the folks out there. So that was great to see them in person. So before we wrap it up, I thought this was a good kind of capstone piece from the weekend. So I'm sure a lot of you read the Berkshire Annual Letter that came out a couple of months ago, and in it, Buffett made a significant point that I think might have gone over the heads of some people. He basically said, my entire track record is, kind of based on a handful of decisions, right? And he's made this point before, but he really reiterated it this year and said, it basically works out to one great decision every 5 years, and those can be clustered. But, over 6 years, it works out to a dozen truly good decisions. And so Ben Cohen, who writes a really good column in the Wall Street Journal called Science of Success, highly recommended. He's had a bunch of good ones recently in there. He wrote a column, I think it came out Friday or Saturday of last week, about this idea. And he even cited some Berkshire watchers, including our good friend Larry Cunningham, who was on the podcast last year, and trying to name what those 12 best decisions or truly good decisions would be. And so I came up with my own list, but I was stuck at 11. I actually can't decide what the 12th one would be. So do you guys want to take a stab at it, or do you want me to rattle off what I think the 11 no-brainer, like Hall of Fame Berkshire decisions would be?
Well, I think it would be crazy not to at least take a couple guesses here. I don't know if I could get even like a handful out there fast enough. But, some of the ones that immediately come to mind are Geico,
Yep.
Seas,
Yep.
Apple,
Yep.
American Express,
Yep.
BNSF.
Yep.
I don't know if Coke does or doesn't make the list. That's one I
think it has to make the list. I mean, he has made so much money off. He's actually made a little bit more money off of that than he has American Express. So, and
but
they
he
were
put
similar
more into it too.
No, they were almost exactly the same
interesting.
size.
Really?
Yeah,
okay.
Exactly. Yeah.
Gillette.
So that's one that's worth considering. I have that just outside. I don't think the dollars quite stand up, and he hasn't. He was. I don't know. That's a good one. We could debate that one for sure.
What about Capital Cities ABC?
Yeah.
So that's a really good one too. And again, I think that's an interesting one because he was taken out of it, right? But it actually would have been his Disney 2.0 chance, right? Because he met Walt Disney in the 1950s. I want to say it was like 1956, had lunch with the man himself, and he could have bought like what would have seemed like a relatively nominally sized investment at the time that would have gone on to be one of the great home runs of all time. And unfortunately he didn't, and sold it too quickly. And then he got another big slug at Disney because of this, which was a huge home run. And so, but actually, you know what? I take it back because I'm neglecting to think that Cap Cities is what brought Tom Murphy into his orbit. And so I think that probably is a pretty fair one to include.
Washington Post.
Yeah, so I actually kind of lump that together, but the Washington Post, in terms of what it did for him personally, I don't think he made enough money off of it to say that it really moved the needle enough at Berkshire. I mean, it was a total home run. It's just he didn't get quite enough of a chance, and it didn't like lead to some sort of lasting shift, I guess. I don't know, but it's a good one. I would put that on the JV team, maybe.
All right, so I'm out of guesses here. You go, John.
Yeah, go ahead, John.
I think
you got any more?
I have a hit on it. I guess,
that's only 1, 2, 3, 4, 5, 6, 7, 8 plus some maybe candidates. I think a couple of them are intangible, so I think you have to, take this with a grain of salt. But I think he would say, and anyone would say, that hiring a G. Jane would be right up there in terms of like value created, because the insurance and reinsurance businesses are the only thing that Berkshire actually created from whole cloth. And I think you could make a great argument that those are, Buffett and Ajit together, like the two greatest insurance investors / executives of all time. And Buffett's decision to bring Ajit into the fold was, one of his great decisions of all time. Likewise, the wind down of the textile operations at Berkshire and taking that capital out of a failing enterprise and putting it into insurance, and particularly putting it into national indemnity in the 1960s, has to be on the list, because that really built the foundation for Berkshire's ultimate success in insurance. So I would include that for sure. Again, totally intangible, but you mentioned See's Candies, which I totally agree with, laid the foundation for lots of other investments over the years, and that never would have happened without partnering with Charlie, right? So you got to put Charlie on the list. And then the only other one, again, for the B team, by the way, I'd put, maybe the global financial crisis preferreds, or the deal he struck with B of A in 2011. Maybe I'd put them on my JV team. But I think the Pacific Corp Berkshire Hathaway Energy acquisitions and investment should probably be on the list, because they've generated a high single digit, low double digit return on massive amounts of money over a couple of decades and counting. And I think that should probably be on the list as well. But it's funny, right? Because look at that list. It's not all of it, to your point earlier, was available to the
blue
general
chip
public.
stamps have come up? Should we have mentioned that one?
Well, it's an interesting one because it was another, kind of liquidation, failing business kind of thing, along with diversified retailing, where they kind of learned some hard lessons, but they got some valuable experience out of it. I would probably put it on the JV team just because it didn't generate enough of a lasting impact or an economic return. But
just some headaches too.
Well, sure. Yeah. But I mean, all these things, everything here has some sort of headache associated with it, right? I mean, that's just the nature of
not Apple. That's been easy as can be, I think.
I guess that's true. And maybe not hiring a Jeet or partnering with Charlie. I guess there's been no headaches really there either. Yep. So, but yeah, I thought that was a fascinating parlor game. And I think it's worth considering, just that mantra that, you have to get some of those big giant decisions right. And once you get them right, you have to get out of the way and not screw it up. So it's just always worth reiterating for me. And likewise, I'll say this, the new 8th edition of the Essays of Warren Buffett is out. Larry Cunningham's masterful collection and collation of the essays, the writing that Buffett's done over all the years that Buffett himself fully endorses. And so, look, I'm biased here. As I mentioned, Larry's been on the podcast. Larry's a friend. I love talking to him and learning from him. So this is not an unbiased opinion, but I do think I reread a big chunk of that book in anticipation of the annual meeting. And over the weekend, I flipped through it occasionally, but I hadn't actually read it in a number of years. And it's just everything you need to know is in that book, right? I mean, just like we just ran down a list of, 10, 12 plus or minus another 3 or 4, like just monster awesome ideas that changed everything at Berkshire and led to this unbelievable performance of 20+% a year over 5.5 decades and counting. The same thing is true of the ideas in that book. It's just everything you need to know. And when I literally bought a copy and got Larry to sign it to give it to my sister and my brother-in-law because they had escaped my wrath and had not read it. And, it's just everything you'd need to know about investing in business. And it's just awesome. So that's what makes the Berkshire weekend worth it for me.
Terrific. Well, I think that's a good place to wrap it up. Thanks so much, Phil, for that eyewitness account, if you will, and Elliot, some great thoughts as well. And thanks everybody for listening. Goodbye for now.
Thank you for listening to This Week in Intelligent Investing, brought to you exclusively by MOI Global, the research-driven membership organization. Learn more at moiglobal.com.